What if I told you that right now, as you're watching this video, there is a form of money that no government controls, no bank can freeze, and no single person owns, and millions of Americans are using it every single day? Welcome back. Today, we're diving deep, and I mean deep, into Bitcoin and cryptocurrency. What it actually is, how it works, why Americans are obsessed with it, and what you absolutely need to know before you ever touch it. Whether you've heard the word Bitcoin 1,000 times and still have no clue what it means, or you're already down the rabbit hole, this video is for you. Let's go. To understand Bitcoin, you have to go back to 2008, the worst financial crisis since the Great Depression. Banks were collapsing. The US government was bailing out Wall Street with your tax money. Regular people were losing their homes, their savings, their livelihoods. People were furious, and somewhere in that chaos, a mysterious person, or possibly a group of people going by the name Satoshi Nakamoto, published a 9-page document called a white paper. The title? Bitcoin, Peer-to-Peer Electronic Cash System. Satoshi's idea was radical. What if we created money that didn't need banks? Money that couldn't be printed endlessly by governments? Money that was controlled by math and code, not politicians and bankers. On January 3rd, 2009, Bitcoin was born, and the world would never be the same. Oh, and here's the wildest part. Nobody still knows who Satoshi Nakamoto is. The person who invented an asset now worth over $1 trillion just vanished. Okay, let's break this down simply. Bitcoin is digital money, but not like your bank balance. That's just a number in a bank's computer that they control. Bitcoin is different in 3 huge ways. Number 1, it's decentralized. That means there's no central authority, no Federal Reserve, no JP Morgan, no CEO running it. It lives on thousands of computers around the world simultaneously. Number 2, it runs on a blockchain. Think of a blockchain like a Google Doc that everyone can see. Nobody can secretly edit, and every single transaction ever made is permanently recorded. When you send Bitcoin to someone, that transaction gets added to a block, which gets chained to every block before it. It's transparent, it's permanent, it's nearly impossible to fake. Number 3, there will only ever be 21 million Bitcoin. That's it, hard-coded into the software. You can't print more. Compare that to the US dollar. The Federal Reserve has printed trillions of new dollars in recent years. Bitcoin, mathematically capped forever. That's why people call it digital gold. Gold is valuable partly because it's rare. Bitcoin is rare by design.
Now here's where it gets really interesting. How does new Bitcoin get created? Through a process called mining. No, not with pickaxes, with computers. Show mining rig footage. Here's how it works. Every time someone sends Bitcoin, that transaction needs to be verified and added to the blockchain. Miners, people with powerful computers, compete to solve a complex mathematical puzzle. The first one to solve it gets to add the new block of transactions, and as a reward, they receive freshly created Bitcoin. Right now, miners earn 3.125 Bitcoin per block. That's worth hundreds of thousands of dollars. This is called the block reward, and every few years, it gets cut in half in an event called the Bitcoin halving. This controls supply and is one of the biggest price drivers in crypto history. Now, what about all the other cryptocurrencies? Because Bitcoin is just one of thousands. Ethereum is the second biggest. And it's not just money, it's a programmable platform. Developers can build apps, contracts, and even entire financial systems on top of it. These are called smart contracts agreements that execute automatically when conditions are met. No lawyers, no middlemen. Then you've got coins like Solana, Cardano, XRP, Litecoin, Dogecoin, yes. The meme coin that started as a joke and made people millionaires and thousands more. Each one is trying to solve a different problem or improve on what came before. Now let's talk specifically about America, because the US has a complicated and honestly sometimes confusing relationship with crypto. First, the big question everyone asks, is crypto legal in the United States? Yes, absolutely yes. Americans can buy, sell, hold, and use cryptocurrency legally. But here's what trips people up. The IRS treats crypto as property, not currency. That means every time you sell crypto, trade it, or even use it to buy something, that could be a taxable event. Made a profit? You owe capital gains tax. Didn't report it? The IRS is watching. Crypto exchanges are required to report to the IRS, and there have been major crackdowns on people who tried to hide crypto gains. On the regulatory side, America is still figuring things out. The SEC, the Securities and Exchange Commission, has been aggressive, arguing that many cryptocurrencies are securities and should be regulated like stocks. The CFTC says Bitcoin and Ethereum are commodities, like gold or oil. There's a real turf war happening in Washington right now. But in 2024 and 2025, something huge happened. Bitcoin ETFs were approved in the United States. An ETF exchange-traded fund lets everyday investors buy Bitcoin exposure through their regular stock brokerage account, like a 401k. Suddenly, Wall Street was all in. BlackRock, Fidelity. Major institutions started buying billions of dollars worth of Bitcoin. The floodgates opened.
Bitcoin went from being worth literally zero in 2009 to pennies, to dollars, to $1,000, to $20,000, back down to $3,000, up to $69,000, down to $15,000, and then back above $100,000. If you bought $1,000 of Bitcoin in 2010, you'd have been worth hundreds of millions of dollars. So why is crypto so wildly volatile? A few reasons. It's still relatively small. The entire crypto market, even at its peak, is smaller than Apple's market cap. Big money moving in or out causes huge swings. Sentiment drives everything. A tweet from Elon Musk once moved the entire crypto market. Good news, regulation clarity, adoption by big companies, sends prices soaring. Bad news, exchange hacks, government crackdowns, sends it crashing. And there's real risk. Exchanges have collapsed. FTX, once the second largest crypto exchange in the world, imploded in 2022 in one of the biggest financial frauds in American history. Billions of dollars in customer funds gone. Its founder, Sam Bankman-Fried, is now in federal prison. This is real money, and it carries real risk. Never invest more than you can afford to lose completely. So, how do everyday Americans actually use crypto in 2025? Investing in speculation. Most people are simply buying and holding, hoping the price goes up. Apps like Coinbase, Kraken, and Robinhood make it as easy as buying a stock. Payments. More businesses are accepting crypto. You can buy a Tesla with Bitcoin, pay for certain services, and even get a crypto debit card that converts your Bitcoin to dollars at the point of sale. DeFi. Decentralized finance. This is the wild frontier. On platforms like Uniswap or Aave, you can lend your crypto, earn interest, borrow against it, all without a bank. It's banking, but run entirely by code. NFTs and digital ownership. At their peak, NFTs, non-fungible tokens, were worth millions. They're essentially digital certificates of ownership on the blockchain. The hype has cooled, but the technology for proving ownership of digital assets is here to stay. Remittances. Immigrants sending money home to family in other countries are increasingly using crypto because it's faster and cheaper than wire transfers. And perhaps most significantly, the U.S. government itself has begun holding Bitcoin in a strategic Bitcoin reserve. America is no longer just watching crypto. America is participating. Look, whether Bitcoin becomes the global reserve currency, or fades into history, or lands somewhere in between, the technology it unleashed has permanently changed the world. The idea that you can have money that no government can devalue, that you can send value anywhere on Earth in seconds with no middleman, that code can replace contracts and banks. These ideas are not going away. For Americans especially, This is a pivotal moment. The rules are being written right now. The early adopters became wealthy. The next chapter is still being written, but knowledge is your most important
asset before any financial decision. So keep learning, stay skeptical of the hype, never invest money you can't afford to lose, and stay curious.